So what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Let's get right into it. You guys know not to fall for spam. You guys know I don't have a WhatsApp, a Telegram, and you guys know that not to fall for spam in the comment section, right? Okay, let's go. Hey, market is falling today. It started pre-market. The Dow has been down as much as 500 points that I've saw, and it could have been lower. Correct me if I'm wrong, but as we can see right here, the Dow, is down another 300 points. As a matter of fact, let's look exactly where the Dow is. Now, I am recording this approximately an hour before the market closes. Let me refresh. And as you could see, the Dow is down and S&P and NASDAQ are all down. S&P is down about 1%, Dow down 1%, and NASDAQ 1.75%. Okay, an hour before closing bell. We're actually off of the session lows because the market was actually a lot lower, as I forestated. Now, what caused this? What caused this to happen? Well, we had data that comes out, right? Number one, the market was already negative. We had Fed members that were talking, okay? They were talking pre-market and before the PCE numbers came out, right? And so let's look and see, for those of us that don't know, for those of you that don't know what PCE is, this is what PCE is, personal consumption expenditures, okay? PCE, price index, released each month in a personal income and outlays report, reflects changes in the prices of goods and services purchased by consumers in the United States. Okay, quarterly and annual data are included in the GDP release. Okay, and so I also want you guys to go to Google and pull up CPI versus PCI. And you'll get a better read on it. Actually, the Fed really does take a look at PCI, personal consumption expenditures. The problem is that we are still in serious trouble with inflation. These numbers show us that inflation is still out of control. It's the monster that will not die. It's like the old monster movie where you keep shooting a monster, boom, 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 and he just keeps coming and it won't die. And that's what's happening with inflation. It just keeps coming back. And then now the Fed may be forced to become yet again more hawkish, right? So this is really not good. We have the 10 and the 2-year yield inversion still inverted. It's right now it's a better bet short term. I see it's a better bet to just put your money in bonds. You could make 4.5 in bonds. Then why run the risk of losing any money? And so if people are pulling their money out of the stock market and then putting it into bonds, then what's happening to the market? It's coming down. So now we had a Fed to speak this morning, and I want you to understand that they have a Fed meetings. And these are some of the things that they discuss. So I listen to these Feds because you get a glimpse into what they are discussing behind closed doors. Okay. All right. So we already know that about all of the Fed agree that this coming Fed meeting this month, in March, right? I believe it's March 21st. Most agree on 25 basis points except two. I said that yesterday, Master and Bullard. Bullard is a hawk and he wants to go 50. And he mentioned that last Fed hike should have been 50. So he's really bullish. The market is scared of him. I'm scared of him. We're all scared of him. Chill out, Mr. Bullard. Okay, so yeah, the next FOMC meeting is March 21st and 22nd. Circle that down on your calendars. So let's talk about what this Fed. I'm not going to play you the video. Let's just discuss some of the things that she said, Fed President Mester, this morning. She said that rates need to be above 5%. Remember, they're trying to get to 5%. She's saying it needs to be above 5%. She also sees inflation coming down, but levels are still high. Went over this morning on my live. She also said she sees a way for inflation to come down without high unemployment. That would be like a soft landing. We would take that, right? She thinks that growth will slow this year, GDP, and we could have a mild recession. And she said that if we do have a recession, that it will be mild. I don't know if mild is the right word. I use mild, but I do believe that it will not, NOT, not be as severe as 2008. It won't be as severe, it won't be as deep, and it won't last as long as 2008 because of what started the 2008. Then she says the results in the interest rate, she actually sees results from the past interest rate hikes. Remember, we had 225s, 250s, and 475 basis points rate hikes, which is a lot. And this market is just like, inflation is just like, eh. So be aware. Now, here's what's crazy, and here's why we are in a lot of trouble. Because spending is still high. Savings used to be at a high. Now we're depleting our savings as Americans, and what? We're putting it on credit cards. Credit card debt is spiraling out of control. As a matter of fact, listen to this. Just think about this. We are in this downtrend, right? Things are kind of tough. Everybody's not feeling like everything is rosy and all of that, right? This has been the most publicized upcoming recession in the history of recessions, right? What are people doing? We're buying airplane tickets and we're spending top dollar for them. Bookings are up. We're buying hotel rooms. Prices go up. We don't care. We're having revenge travel right now. What's revenge travel? Hey, I had to cancel a cruise in 2020 and 2021. I had to cancel this trip in 2020 and I waited and I'm just going to experience life. We were all shut up for 2 years and now it's time to get out and party. And I don't care if I have the cash. I'm going to charge it. So we are all General Custer as a country here in the United States. Charge, charge, charge. Live Nation, which does the concerts. They promote the concerts, right? Remember the whole Taylor Swift debacle, right? People are paying $1,000, $1,500, $2,500 to go see Beyonce and Taylor Swift, right? And they're going into debt. Because the little girls are, mommy, I gotta go. And the mothers feel like she's gotta be a good mother. So she's gonna spend $2,500. And they're flying, getting hotel rooms and going to other cities because they can't get tickets in their cities. Live Nations are reporting record-breaking demands. Live Nation are the ones who booked these acts, okay? New home sales, though, jumped in January from 670,000, and they were expected to jump 620,000, but they actually jumped 670,000, okay? And so if the consumer finally taps out, we will go into recession, deeper recession. When the consumer says, okay, that's it, I'm not spending any more money, that is the ultimate tap out. And the consumer will soon run out of money. The consumer will soon not be able to charge anymore on the credit card. So what does that mean? So this is not fear-mongering. This means that we have opportunities. I've been preaching for the last 14 months. Balance your portfolios, get out of these crap stock, and remain mostly cash. Because when we have days like this, instead of being afraid, we get ready to pounce because we ain't scared, we prepared, okay? So someone asked me, I was talking about energy, oil, because oil is down, oil is down since the beginning of the war. So today marks 1 year of the Ukraine war, right? The Russia-Ukraine war. 1 year, Russia started going into Ukraine. And by all past accounts, energy should have been high. But it actually is very tamed, okay? And so I believe, remember, anything I say is not a suggestion for you to buy, hold, or sell. I believe that energy actually will ramp back up. I believe that Putin could just go, you know what, let's just give a last push. I believe energy could go back up. And if you're looking for energy, I'm going to show you here something on the Moo app. So check this out. At the bottom, go to markets, right? And then you see the red at the top in the middle there. It says heat map. Go to the heat map. And this is how you can find stock. This is how you can find some plays. You see, it says oil and gas. You go to oil and gas and you'll see a ticker symbol at the top. You'll see a stock at the top. But when you scroll down, there you can see my EOG play. You can see CNQ, PXD. You can see all of these stocks, right? Then you go here and then there's another one that says oil and gas. And then here you have it. Look at that. XOM, Chevron, Shell, BP. You have all of these CVE, all of these plays. And now it's just simply helping you to find other energy stock. If you think that energy is going to go up, this helps you to find other plays that are like the plays that you are in or that you are looking for. So someone says, how do you research or how do you find these stocks? Because Moo sends me alerts. I have my alerts on. So if you don't have your alerts on, make sure you cut on your alerts, because you may think it's cumbersome, but these alerts help me to make a lot of money. Okay. So Moo will be the top link below. All right. Actually, Moo will be the second link below. And for those of you that haven't heard by now, you got to be living under a rock. My class will be the top link, and then Moo will be the direct link below. Make sure you download it and read everything. You see the different plans, and you are guaranteed free stock just by downloading. Okay, but they want you to put a minimum of $100 in there. Right. I want you guys to have a blessed and safe weekend. This wasn't a good week, but we live to trade another day. Next week, we're just going to see what it is, and we're going to trade the market that we're in. Like I always say, we're going to trade day by day, week by week, and month by month. We're going to see what the data is saying. We're going to trust the data as far as our plays, and then we're going to invest accordingly and continue to make money. Meanwhile, and that's in the micro, if you're looking in a microscope, but if you're looking in a telescope, my message is continually the same. Cash up, cash up, cash up. Live, love, laugh, learn, and earn. We'll see you.